Welcome to XM.com. I'm Cristina Marujos, and you're watching today's Daily Market Comment by Raf Boyajian. It's been a relatively calm but mixed start to the day as investors are waiting to see what new measures NATO leaders will agree on to curb Russia's advances into Ukraine. U.S. President Joe Biden will be attending the emergency summit in Brussels as well as participating in an EU Council meeting. He is expected to announce yet more sanctions against Russia, though more interesting for the markets will be what, if any, new action the European Union will come up with. European leaders are under pressure to get even tougher on Moscow by banning Russian oil imports. However, the risk is that Russia would cut off gas supplies to Europe in retaliation, something that would almost certainly trigger a recession in the euro area. Hence, the stakes are high should the EU decide to escalate its response. For now, though, there is some relief that European economies entered the crisis in robust shape. Today's flash PMI releases for the Eurozone and the United Kingdom have been much better than expected. Nevertheless, European shares were struggling to hold on to earlier gains. The rebound in European equities has stalled this week, even as Wall Street has maintained some momentum. Surging Treasury yields and a hawkish shift by Fed Chair Powell only caught up with U.S. stocks on Wednesday when the S&P 500 dipped by 1.2%. In Moscow, meanwhile, the MOEX Russia index climbed about 10% in very restricted trading when the stock market reopened for the first time since the onset of the war. The Russian ruble, on the other hand, slipped by more than 7%, reversing most of yesterday's gains, while the greenback maintained an upward trajectory on Thursday, rising against all its major peers as Treasury yields head back up again. This week's flurry of Fed speakers will continue on Thursday. More hawkish rhetoric from the Fed would only cause more misery for the battered Japanese yen, which has slumped to 6-year lows against the dollar, breaching the 121 yen level. The Swiss franc fared only slightly better than the yen on Thursday after the Swiss National Bank kept its monetary policy setting unchanged. Policymakers might be hoping that a stronger currency will lessen some of the inflationary impact from the war while maintaining rates at a record low. Meanwhile, both the euro and pound remained under pressure for a second day. Thank you for watching the Daily Market Comment here at XM.com.